Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday, hosted by Cal State Bakersfield Small Business Development Center. This is Webinar Wednesday number 313 on March the 20th, 2024. I'm Kelly Bearden. It's great to be here for another webinar. So thank you everybody for joining. It's got a great program today. Going to be talking about some great programs. Really, as I go back and look at my favorite small business financing program over the decades, we will be discussing that today with the SBA 504 program. If you can qualify, if it meets your financing needs, the capital that you're acquiring, you're going to find out it's probably the best thing since popcorn. It's great to be here today on March the 20th, 2024. And as I mentioned, it is SBDC Day. We are celebrating locally. We're celebrating throughout our region. We're celebrating nationally. We're celebrating the work that SBDCs can do and can assist in your businesses. The SBDC program is really the longest tenured small business technical assistance program in the United States. We go through rigorous accreditation and go through a process to where we are monitored and surveyed and analyzed on a regular basis. And it's our day to celebrate. So SBDC Day, there's celebrations going on. I know up in Fresno, for example, our good friend Rich Mostert at Clovis Community College right now is doing SBDC Day with a large gathering at a luncheon. So we do it with our webinar because for some reason they decided SBDC Day should always be on a Wednesday. So here we are. So it's a celebration, and that is pretty much our celebration for today. But we're also celebrating March being funding, and our funding continues. Our Ides of Capital for March continue with a discussion today on fixed asset funding. You're buying major assets for your business. You know after watching Webinar Wednesday enough that you need to pay for that over a longer term. And so we'll be talking about some longer term financing for those fixed assets that might help your business grow and succeed. Also, it's going to be our last chance coming up for the employee retention credit, the amnesty program that will be ending on Friday. And that is a program through the Department of Treasury, the IRS, and a program that actually, has been going on since the third quarter of 2020 during the pandemic. And really it's kind of been going on and off and a lot of disinformation. So the Department of Treasury decided to come up with an amnesty program to where individuals can keep 20% of the money that they received and return 80% if they feel that they're not as qualified as they were when they made their original application. So that ends on the 22nd. There's been kind of what I like to call the upheaval over the business or beneficial ownership information form that is actually, it's either required to be or not, depending on which court is speaking in any particular week. So we will update the BOI through the Corporate Transparency Act, have a brief update on our economic corner for today that is going to cover the new minimum wage for fast food franchises. That's going to affect all food establishments. I believe, in what a lot of our independent and mom and pops feel, that it's going to affect some of the positions in their businesses. We'll talk a little bit about some of the new aspects of that coming out. We will also jump into our capital quarter, which will be covered today, genuinely by our special guest today, Lisa Carbajal. We'll be getting to that. Also, more on the EIDL hardship, the EIDL hardship loan, hardship request that you can make if you have an EIDL loan and you're running into some issues on repayment. We talked a little bit about a program last week. Your questions, as always, will be answered live. So if you have a question today, jump into that Q&A box and go right into the question. Our chat today will be monitored by our producer, longtime producer, Maureen Busher-Dang, who will be adding items that we talk about, resources, contacts, and other things into the chat today. And as always, well, at least as always when we do have it, a poll. And we do have a poll today. So let's jump into our poll is used for many different purposes. We use our poll for a lot of different things here on Webinar Wednesday to gauge, the topic that we're talking about. It can also be on a variety of other things, which they happen to be today. So today, what we're going to do is we're going to do something, what we do, a little thing called market research, and we want to know what you want to know. So even though we do survey after most of our webinars and you have that opportunity, we really want to know what you want to see in the future. So what do you want to see on Webinar Wednesday? What topics are most important to you? Is it more loan options? Is it accounting, finance, and cash flow? Marketing, social media, and e-commerce? Is it the current topics, a lot of the programs that become available and trends that are happening in small business? Is it economic information? Is it what's going on in the economy? A lot of stuff happening there. Is it have to do with employees? Is it HR recruiting, managing employees? You can vote for more than one. I don't let you do that very often, but you can vote for any of those particular 6 topics, or you can go into the poll and add another topic if it's not there. So just put, I would like to see, and add that to the chat box. So as we do Webinar Wednesday research, little market research here, thank you for being here. It's great to have all of you out there participating in today's poll and being on today's webinar. And the first poll question is, what topics would you like to see? More loan options. Would you like to see more on accounting, financial, and cash flow? More on marketing, social media, e-commerce, current topics, programs, and trends, economic information, some of the studies, a lot of great studies happening, and also managing employees, recruiting, human resource topics. We do have 64% of you that are participated at this point, so please jump in. We're going to give you another few moments in order to jump in and pick as many of those 6 topics as you'd like. And also you can jump into the chat box and add any additional topics. So we're going to wind down poll question number 1 with 65% of you participating. Thank you for your participation and in the poll, and share those results with you. And what we find is we find that 67% of you want more loan options. And boy, it's been popular this month with a lot of the lending programs. 58% want current topics, some of the programs and trends that we go over a lot here on Webinar Wednesday. Accounting, financial, and cash flow. Those covered pretty well. 33% of you want marketing, social media, and e-commerce information. Economic information and slides is next, 21%, and rounding up, HR, recruiting, and managing employees, 17%. So 2/3 loan options, a lot of financial and current topics. As we stop sharing this and move on to our second of 2 poll questions for today. And so our poll question, let me set this up a little bit. This poll question, it's a little more whimsical, just from the standpoint that what we run into is we run into a poll that we did back in the year 2020 that was kind of fun, had a big audience, and actually, as I'm having some issues with the poll, but we will get to the next question. And the next question is going to be a little more whimsical. It is going to be more or less on a question we had related to something in the news this week, and that's Ben & Jerry's is being sold again. Ben & Jerry's sold to the Unilever Corporation, and now they're spinning it off. And so what we wanted to ask you was, what is your favorite, not what is your favorite, what was the top selling Ben & Jerry's ice cream? And there are 3 flavors listed. Is it half-baked, cherry Garcia, or chocolate fudge brownie? And this actually goes back to the year 2020, but the results are consistent in each year. And there are 3 options here: half-baked Ben & Jerry's, cherry Garcia Ben & Jerry's, and chocolate fudge brownie. Only one choice this time, and 3 flavors. And I will tell you this right now, they do rank 1, 2, and 3, so I'm not going to make it easy for you, unless, of course, you Google it. So we do have 57% of you participating in what is the top ice cream flavor by sales for Ben & Jerry from the year 2020. And again, give you a couple of more moments to jump in on that. And then if not, we're going to end the poll with 58% of you participating and share the results. And the results are chocolate fudge brownie. Oh, that's a good flavor. My personal, that actually got 43% of the vote. Cherry Garcia got 38%, and Half Baked 19%. And number one is Half Baked. Year in, year out, apparently. Half Baked is the number one selling Ben & Jerry's flavor. I know there's a lot of them that you like that I didn't have on the list, but that's how it goes, right down the list there. Half Baked 1, Cherry Garcia 2, and Chocolate Fudge Brownie 3. Okay, made me hungry even just talking about it, I know. So let's move on. Okay, some of the topics that we're going to be talking about, and since you like current topics and programs out there, well, this is current. As of Monday, we have new news on the fast food franchise $20 minimum wage that starts on April the 1st. Again, you might recall it affects all food businesses, we feel, even though it's only going to be the top 60 franchise and fast food businesses in California, or those that have over 60 locations. And they are required, of course, there are some provisions. One is the it seems like that, the $20 minimum wage. And for many small and pops, it's going to really impact them because they do have many, food prep and chefs and sous chefs and trainees that are going to be making under that $20 per hour that now all of a sudden could actually get a pay increase by going to a franchise or fast food restaurant. Sure, it's going to raise the cost for just the fast food and the franchise restaurants on the list, but it's going to be something that impacts wages on all restaurants, and it's going to impact the profitability and therefore the cost to us consumers as well. So again, it's for 60 or more locations in California. Kind of some controversy out because it exempted some of those that bake their bread on site. And we've talked a lot about the disadvantage that small food businesses have because so many of the fast food and franchises will produce their foods out of state in low or lower minimum wage states and process it and move it into California. Whereas our small independent businesses and our mom and pops, where, as you can tell, I might have a preference, they must produce it on site with higher minimum wage, right now being $16 an hour here in California. And then also affect that some of their $16 wage earners might go to a fast food or franchise that can pay them more. So there is a panel made up of industry and fast food impacts that will determine future increases. And also this panel will meet for other regulations that could affect other businesses. So this week, the California Assembly approved some exemptions to the state food law. And those were carve-outs that were actually done and are thanks to Cal Matters. So it's a great newsletter that daily that puts out a lot of this information, sent it to me. So I'm sharing it with you. And some of those carve-outs are airports, hotels, convention centers, sporting event venues, and others that do not have to pay the $20 minimum wage. And so this was passed by Assembly Bill 610, and it passed with 55 votes, just clearing the 2/3 majority. After already passing the Senate, it is on its way to the governor's office for likely signature. We'll talk a little bit about that in just a second. Last week, we also talked about the PPP forgiveness workshop and forgiveness portal, and also EIDL hardship accommodation loan. And so really, I think the one part of this that really came out on March 15th, last Friday, when SBA held a webinar, and really who you're going to want to do is you're going to want to contact SBA directly. If you have an EIDL loan, for example, and you're having issues on repayment, we'll be bringing SBA on for some more discussion on this. I believe most people that we've talked to have gotten through PPP loan forgiveness, but there's still an opportunity, even if you've been making payments and haven't got it, the loan forgiven, that you can go back. But really the issue here that we're seeing with far more borrowers is on the EIDL hardship. And that is where you're having an issue paying. You could in the future have an issue paying. The EIDL hardship, which is generally for the economic injury disaster loans, those SBA loans that were related to COVID. Almost 4 million of those were made nationwide, and a lot of those are in either slow pay or default. And really, we mentioned in the past some of the hardships that come up for the borrower standpoint is it can affect student loans in the future. It could affect any government lending program, including the one you're going to hear from today, if you have a write-off in a particular federal loan program. So the government is really trying to do everything that they can with this EIDL hardship. For example, if you sign up for it, you can get your EIDL loan reduced to 10% for a 6-month period. Interest is still going to accrue. But if you have a $5,000 EIDL loan, you can get it reduced to as little as $500 as you try to improve the situation around there. And then there are other levels to where you can continue for over 2 years of receiving reduced payments in order to stay on a track to repaying. So very important, I would contact the Fresno district of the U.S. Small Business Administration, and you can talk to them for more information. We talked a little bit about already the employee retention credit and why you might want amnesty on your employee retention credit. And that was up to $26,000 per worker. A lot of things came out, whereas really, there's the old saying, there's the devil is in the details, and it really came true with this one, where a lot of third-party marketing companies marketed this program and didn't market all of the requirements and intent that go with it, including going back and filing amended tax returns that are going to, when you file those amended tax returns, they're going to increase your tax that you're paid. So then there's going to be interest and penalties that could be accrued on those amended tax returns and on the tax that is going to be added for those amended returns. Also, there are other reasons, but really to qualify for the 80% ERC, you need to notify the IRS by Friday. You can keep 20% of that, figuring that you might have paid that to the marketing company in order to get this credit. But under the agreement, you would still be able to deduct full wages. And that is really the hinge on all of this, is that if you receive this credit, you'd already filed a tax return in 2020, and you claim the full amount of your wages on your tax return. When you get this credit, you have to reduce that amount. So you have to go back and file amended returns, which increases your taxability. You have to pay tax, you have to pay interest, you have to pay potentially penalties. IRS is coming out with amnesty saying, you don't have to do all that. Just give us 80% of the money back. Last day is Friday. The Corporate Transparency Act, the latest on it is there was a lawsuit filed. That was actually, the ruling was made 2 weeks ago today. It was breaking news on Webinar Wednesday. And so essentially 32 closely held businesses, 32 million closely held businesses that are either LLCs or S corporations, have 20 employees or less, are needing to go provide basically contact information and also ownership information into a federal portal. Now, the last day to do that for businesses that started in 2024 is going to be March the 31st. You started earlier, you have more time, and this is why it's in such upheavals, because it is being challenged in court. And really where we stand right now is that the rule has been ruled unconstitutional. It is being appealed and can come back. So there you have it. If you have 20% ownership, but right now, it's in status. Its status is unknown. But if I had started a corporation, an LLC, or another entity that actually needs to file by March 31st, you're providing information into a portal. I always believe that when in doubt, file. And I would probably do so if it was me, if I had started an LLC or a S corporation as of January 1st of 2024. We've got a lot of tools that you can access here at the SBDC. We talk about a lot of them here, including, I think last week it was our cash flow forecast, and we oftentimes bring up the fact that we have licenses for LivePlan, an incredibly intuitive AI-enhanced program that can help you write a business plan. With your SBDC advisor, you can actually occupy one of those seats while you get that done and work intuitively with not only your SBDC advisors, but other professionals that would have access to the live plan business planning process tool. So that's one of the many tools that are in there. Another one is our CSUB SBDC YouTube page. And most, not all, for example, next week, our special guest next week has a condition where we can't put next week's recorded webinar into our YouTube. We will make it available for other means, but most of our, almost certainly nearly all of them, go to our CSUB YouTube page, and it is available there for you to actually access as soon as the weekend following the webinar. So if you miss the webinar, it's always going to be right there. Our free human resource hotline that we like to promote through the California Employers Association, screenshot or look at some of the resources that we have. If you're in any of those counties, you can ask them free HR questions at those particular time. Last week, we got a lot of people ready for being credit ready, and we're getting you credit ready for a great program, the SBA 504 program. And our special guest today is Lisa Carbajal. She is the Senior Loan Officer for the SenCal Business Finance Group, and she's going to be working and providing a lot of the SBA 504 programs. Again, you heard me mention it. I can't give you a better endorsement for a small business lending program. If you can qualify for this program, this is the one. Lisa's going to provide us some great information on the particular program. It's great to have her on Webinar Wednesday. Lisa, take it away, please.
Thanks, Kelly. I appreciate you having me on Webinar Wednesday. Like Kelly said, my name is Lisa Carbajal. I am the Business Development Officer or Senior Loan Officer with SenCal Business Finance Group. So just a little bit about who SenCal Business Finance Group is. So we are a private nonprofit organization that was established in 1984. We were also licensed by the SBA in the same year in order to deliver the SBA 504 loan program. There was just a recent change here locally, February of 2024. SenCal Business Finance Group acquired what was Midstate Development here locally. We are in the same location that where Midstate was, on the corner of 17th and H. So SenCal is designed to assist businesses with financial growth. So the SBA program offers debentures or bonds that are sold in the privately held market in order to guarantee 40% of a loan that you get with the bank. So these bonds, like I said, are fully guaranteed by the SBA. So it's a wonderful program. So let's talk about the program. So the 504 program was designed for commercial loans for expanding businesses. Typically, the 40% or could be as high as 40% portion of that loan offers a fixed rate much below the market. For example, the fundings for March, we were at 6.23, typically about a 1% below what you would see at a financial institution on 40% portion. The financing is offered for fixed assets, real estate, and machinery and equipment that has an economic life of at least 10 years. The terms for the real estate is 10, 20, and 25-year amortization. Those rates are fixed for that period as well. Machinery, you typically see a 10-year term on the machinery and equipment. Again, it has to have an economic life of at least that 10 years. So the 504 program is designed to promote economic development here in the community. So it helps business owners afford long-term financing, keeps capital in their pocket, and helps with personal income and wealth, because on the 504 program, you're not seeing liens on personal property. It also promotes and helps the community with jobs, increased taxes, and other business investments. The private lender, the third-party lender that we partner up with, it gives them a safe, secure option where they're at a 50% loan to value on an SBA 504. It also gives those financial institutions community reinvestment credit, which is very important right now in this day and age with financial institutions. And CDCs do have to be certified by the SBA, and there's over a network of 210 nationwide, and they're mostly not-for-profit. So advantages of the SBA 504 program. So it offers clients long-term below market fixed rates. Client equity requirement can be as little as 10%. We'll cover this a little bit more in the presentation. Some require a little bit more down, but we'll talk about what those situations are. The bank can provide 90% financing for clients. And then again, that partner, that third-party lender that we partner up with is at a 50% loan to value on that lien on that project. So the minimum loan amount. The smallest debenture can be $50,000. So that translates to an overall project size of about $125,000. I know the smallest that I've done is $225,000 overall project. So again, it was an office condo for a dentist. So like I said, the limit is $50,000. But typically our projects range around the $500,000 range overall. But again, that $50,000 is the SBA portion, that's the minimum. So let's talk about the maximum SBA loan amount. So you can borrow up to 40% of the project cost or the overall SBA guarantee portion. So let's talk about that a little. So the overall SBA portion is $5 million, and that's for an economic development, job creation project. So that's for the debenture portion or the 40% portion that we're talking about. And that is for per project. So 5 million is that cap. Over the lifetime, a person can have up to 16.5 million in SBA funds. Again, overall projects, and that does include 7A lending that a client may have. But one project is capped at 5 million. There is a little caveat though. If that project is involved with manufacturing or building a building or acquiring a building that involves manufacturing, that bumps that up to 5.5. The other caveat is green initiatives. So if there's solar being added onto that project, or if it's reducing the overall energy consumption in a particular building by changing lighting or adding solar, that can also bump that project cost up to $5.5 million on the SBA portion. So this is just a little snapshot, a visual of what the typical 504 structure looks like. So overall 100% project, you have a 50% loan with the third-party lender. You have your customers or your clients' 10% injection, and we'll talk about that, what that injection involves. And then we have the SBA CDC portion of 40%. This is on a standard purchase with no extra special items, such as a startup business or special purpose. So again, here is the 504 project financing model. Just gives you guys a visual on a project sample of around $1 million. So the first mortgage lender, the third-party lender, would hold a loan amount for $500,000 and be in first lien position. You see the SenCal SBA portion is $400,000, and we sit in second lien position. So during the process, when the client is requesting for a loan, that total of $900,000, that 90%, is completed by the financial institution. The 40% portion is done as a bridge loan that is kept with the financial institution for a short time while the SBA and the CDC gets approval to purchase that from the financial institution. So typically that bridge loan, you'll see an interest-only period, typically between 6 and 8 months till we can get that purchased and acquired by the SBA. So the client's portion or the borrower's portion is 10%. And this is cash or equity. So they can either come up with the cash of $100,000 towards the overall project, or, for example, if the client had purchased land and they built on this particular piece of land and they paid $200,000 or $100,000 for the land, that equity that they have in the project by purchasing the land goes in as their portion or their injection. So that's, again, just a real quick visual of standard project modeling. So I mentioned that there's a couple of items that require a little bit more down payment. So that's a special purpose property or a new business. So what is considered special purpose? So it's going to be your gas station, your hotel, car washes, things that normally involve either underground or a little bit higher risk, they consider special purpose. A new business is defined by the SBA of a business that has less than 2 years of tax returns filed. So they've been in business for less than 2 years. So that requires an additional 5% equity injection or down payment from that borrower. So again, here's a sample. It's a $1 million project. The first mortgage is $500,000, which is in a first lien position, a great position for that financial institution to be in. And then you have the second lien position or SBA portion of $350,000. Then you see the borrower coming in with 15%, which equates to $150,000 in this situation. And again, can be cash or equity in the property. So let's talk about some eligibility requirements. So who's eligible for an SBA 504? So it has to be an operating for-profit business. They have to be located in the United States. And then the SBA defines it designed for small and mid-sized businesses. So there's a recent change by the SBA that just took place this last Monday, where they actually increased the tangible net worth up to 20 million on a business, and they can have an average of 6.5 million net profits after taxes. So that was an increase from, I believe it was 15 million tangible net worth, and then the net profits were previously 5 million. So there's an increase of 1.5 million there on that average. So gives a little bit more room on some mid-sized businesses. Job creation. Typically, you want to see one job created for every $90,000 loaned on an SBA 504. Again, we want to look at this as an economic development and job creation tool. The occupancy requirement for the owner for existing businesses or existing buildings, they have to occupy at least 51% of the square footage of that building. They can lease out to that 49% and get some income from there. That income just cannot be factored in the overall qualification. On construction, so on a new construction, the client does have to occupy 60% of that new construction. And then there's an option for future growth in the remaining 40%, where in 10 years, if that business does grow out of that 60% square footage, that they can at least move into an additional 20% and occupy overall 80% of that building. So it is designed really for that future growth. So eligibility or eligible uses for proceeds. So you can use an SBA 504 to acquire land for construction on new buildings. Like I mentioned, you have to have that 60% occupancy requirement, and that's at closing. You can purchase land and do land improvements. You can purchase one or more existing buildings as long as that operating company is occupying 51% of the square footage. You can remodel, convert, expand, and renovate. So you can include tenant improvements on your building purchase. You can also use the program to purchase machinery or equipment with at least a 10-year life. And you want to think of the machinery as large pieces of equipment that are going into a building that are bolted down that just can't be moved very easily. It's basically that long-term heavy equipment. And then refinance an eligible project debt. So we are currently doing SBA 7A refinances. And if you have equity in the property, you can actually now refinance that into an SBA 504 loan. So it gets you out of that variable rate and into a fixed rate, longer amortized loan. So that's a new option. So business owner advantages gives you the low down payment and enhanced cash flow. So again, you can have as little as 10% down in your project. Long-term financing at competitive rates and up to a 25-year fully amortized. Like I mentioned, our March fundings were at 6.2, which is actually really great rate. It gives you a predictable monthly payment because you know that payment's not going to change. It's fully amortized, 25 years, and you know every single month there's not a rate reset or any additional things that are going to change that payment. It's fully amortized for that 25 years or 20 years. And then ownership options are tailored to meet small business owners. So it gives you the option to actually put that property into a holding company, or you can hold title personally, you can hold title under a trust, or you can hold title under the operating company. So there is some flexibility there to help you as a business owner. And then we do offer projection loans to be considered on a case-by-case basis for those startup businesses. So things to know about the 504 program. So there is prepayment penalty within the first 10 years of that loan. There are no additional principal payments allowed towards that SBA portion. Now talk to your financial institution because you could pay additional to principal towards the first lien with no prepayment penalty. But again, that is something that you would discuss with your third-party lender. And then no investor projects are allowed. The 504 program is really designed for that business owner that is looking to expand to a larger location, add a second or third location. So it is really designed, it is designed for that business owner and that owner-occupied property. So how do you apply for the 504? So applications can be processed directly through a CDC like SenCal Business Finance and done in partnership with a third-party lender. So if you don't have a relationship with a financial institution or with a relationship manager at a bank, you can come directly to SenCal and we can find the right partnership for you depending on your project, because there's different financial institutions that have appetites for certain types of loans. And then you can also work directly with your relationship manager if you have a great relationship with your banker, and they can collect the loan package and you can let them know, hey, I want to work with SenCal as my CDC for the 504 program. And then they contact us and we work together to get that accomplished for you. And we can actually underwrite the deal in conjunction and simultaneously through the process. So what would you need to apply for the 504? So you would complete an SBA application, which we would email out to you. So if you're interested, you can reach out and we'll send you a needs list. A financial statements on the business, the operating business. We would need 3 years of business and personal tax returns. Again, for those startups, we have special circumstances for that. You can definitely go see Kelly for some projections to help you put a business plan together to show that startup business and the success it'll have. Personal financial statements, we would need business resumes to show that you do have history in operating that particular type of business if you are a startup. And then business overview and history. So what's the SenCal advantage? So we have local underwriting. I have my underwriter right here in our office who understands Kern County, Bakersfield, and the Central Valley, and how businesses operate in this area. We have local credit approvals. We have local documentation and closing. I've got my closer right here in the office as well. And we do work with you on eligibility and pre-qualification if you need one to make an offer. So please remember and think of SenCal as your SBA information resource, which I will provide you some information here on this slide, which is my cell number, which is the best way to reach me. You can call or text. Our office number, which gives you access to our underwriter as well as our closer, is available here. And then our address. We are located at the same place where Mid-State Development was, on the corner of 17th and H at 1631 17th Street. My email address and then our website is sencalfinance.com. So go and check it out. Any questions?
Fantastic, fantastic information.
Thanks, Kelly.
Great program, like I've always said, and really, now's a great time to ask Lisa questions. Go to the Q&A, pop in some questions, and I think one thing I just wanted to mention and talk about briefly was that, when you get about a 60% occupancy, a lot of people don't zoom into that right away and realize that they might be growing their business and need a 6,000 square foot building.
Right.
And if they have a sufficient size lot that they might have purchased, right, oftentimes it is economically feasible to build a 10,000 square foot building and lease the other 4,000 square feet. And then what they're doing is even providing greater economic development by making a space open for another business.
Correct.
So do you see much of that? Do you hope to see much of that, Lisa?
We do actually see that. Like I said, people, if they're going to spend the money to build businesses, they're going to make sure that they are thinking of future growth, long term, because it's a long-term asset that they're purchasing. So, going larger with that opportunity to actually eventually occupy at least 80% of that within that 10 years. So we do see that.
The other thing that sticks out is the fixed rate, the 6.2% fixed rate. There was news again today by the Federal Reserve hoping that they're going to reduce rates, but a 6.2% rate when the prime rate, the Wall Street Journal prime rate today is 8.5%. So that's incredible that you can get a fixed rate for that kind of value.
Right. No, it's a great rate. We've seen them drop over the last few months, so hopefully that will continue to just give business owners more buying power with those low rates.
And the other SBA program we talk a lot and have the last few weeks is the SBA 7A loan. And that is their guaranteed loan program, which does not offer a fixed rate, which is a variable rate.
It is a variable rate tied to prime.
And oftentimes that can swing as much as almost nearly 3% over the prime rate.
That is correct.
But the great thing about having the fixed rate is that you can plan, you can project what your payment's going to be over a long period of time and not have that interest rate shock or that interest rate insecurity that comes with variable rate.
No, absolutely correct. You are absolutely right. That's where we're seeing a lot of 7A refinances because there is that volatility with the 7A program. Again, 7A program is a great program for those who maybe do not qualify for the 504 program. It allows them to at least get into or acquire a business. But if there is that real estate that's tied into that 7A, later on down the line, we can always take a look at that property. If there's equity in that property, we can always refinance that into a 504. I'm actually in the process of doing that for a client that is expanding their business. And then I look to see that they had a 7A when they acquired their very first property, and we're refinancing them out and saving them about 3% and over $1,000 a month on that.
Great. So, you know, at the
Yeah.
SBDC, we're seeing these days a lot of acquisitions. We're seeing kind of a grain of American businesses, American small businesses. And oftentimes there's that real estate component in there. So on an acquisition, if there is, say, a real estate or heavy equipment component to that particular sale, can that be a 504 loan?
That can be a 504 loan, correct. And then the acquisition piece can be a separate 7A.
And oftentimes I think we see at the SBDC that a business owner will elect to hold the property in a different form of legal entity, maybe a LLC or an S Corp or some other entity. And oftentimes they retain that component of it, but oftentimes they're willing to let go in the acquisition. So that's great to know. Well, we have some questions. Let me go to the questions and see what we have in here. And the first one is, are there balloon payment options?
There are not balloon payment options on the 504 program. It's fully amortized. Again, 10, 20, or 25 are the options.
But you are able to repay it without penalty after 10 years.
You would have to pay it off completely if you were to pay it down. You would not be able to do a principal reduction on it because, again, it's looked at as a long-term asset. So after 10 years, there's no prepayment penalty, but if you wanted to pay or reduce that principal, it would have to be paid in full.
Okay, thank you for the question. And next question is, I have 11 full-time employees. If I'm wanting a building and need 900,000, does the 90,000 per employee count work?
Yes, your existing employee retention does count towards that.
And again, you can always build a bigger building and rent it out if it makes economic sense. And
correct, you're absolutely right, Kelly.
So, okay, our next question is, tried a few years ago to expand our manufacturing footage. I don't see a question in that, but I think the 504 program is open for manufacturing type.
Yes, most definitely. And again, there's that extra 500,000 that's on the overall project cost.
So yeah, great program if you're a small manufacturer looking to expand, looking to quit renting and actually buy your own property. Next question is again based on the job creation component. And can you work with both full-time and part-time workers to create full-time equivalents?
That is correct. So we do ask how many full-time and part-time you have, and that is all calculated in. And again, existing employees are counted because it's retaining jobs. And then if you're adding square footage, it's looked at to expand. And that's where, again, it's not overnight. It's how many employees do you plan to add for the overall?
Next question is the rate on the first loan, the first deed of trust, is it fixed also?
Good question. The rate on the first loan falls under standard commercial lending terms. So I came from commercial lending. So typically you're going to see a 10-year term amortized over 25 years. And there is either, it's either fixed for that 10 years, or there's a one-time rate reset after 5 years. Or sometimes it's fixed for 7 and then a rate reset for the remaining 3. But typically max term is 10 years that you'll see with the balloon payment due that you have to refinance out of. So it's fixed for a certain period of time, but there's typically a rate reset in there. That would be something you discuss with your third-party lender or your financial institution, and they would be able to discuss those terms with you.
Yeah, and just a quick reminder on that structure, it's 50% is done by the bank or lender or third-party lender. So 50%, and they hold the first deed of trust, and then you come in the second position. So you do have the rate security for 40% of your total transaction cost. And then the 10% is the owner injection that they need to put in.
Correct. You're absolutely right.
Okay, great. Next question. Is there a restriction as far as metal buildings or a 3D printed concrete structure or other material? Would a lender not participate if there was no metal siding or concrete blocks? I guess we're getting into the kind of materials, and obviously there's new construction materials that are out. Are there any limitations on the construction of the particular building?
No, as long as the financial institution that you're partnering up with that's going to hold 50% is okay with the contractor and the type of building that's going up.
Next question would be, would the 504 program be available for an individual purchasing an existing business? I think we've got a little of that a while ago. Or would it be smart to look at 7A and refi into the 504 once it became available?
So it really depends. If you're buying that small business and there is a real estate component to it, it's really beneficial to use the 504 program to acquire the real estate that way. And then the business assets and the business itself financing with an SBA 7A.
So multiple loans would be probably get you the cheapest interest rate over lowest average cost of capital by utilizing the 504 for the real estate, and then the goodwill and the other components of buying the existing business could fall under a separate deal. It could be done by the same bank that's actually doing the 504.
Correct. You're absolutely right.
Seen that deal. It's out there.
Yes.
Can you start payments on the loan 2 years after taking out the loan? Is there a component for delaying the first initial payments of the loan?
No, unfortunately not. So once your loan closes, you have, again, your 90% financing done with a financial institution. 50%, your payment starts 30 days after you close. And then you have the bridge loan or the interest-only loan that you'll have a monthly payment on 30 days out. And then once the SBA purchases that bridge loan, you have now your fixed payment that you know you're going to have for 25 years, and that payment starts 30 days after.
Great.
Unfortunately, there's not a deferment.
No deferments. So jumping into the chat box, Maureen, thank you for clarifying and getting some great resources for the EIDL loan and the Fresno District Office information. You can call them by phone or by the email address. Also, there's the EIDL Hardship SBA link where you can go in and look at the link online. There's the employee retention credit, and there's information on that. For more information, again, that program ends in 2 days, so time is obviously of the essence. The Corporate Transparency Act, you can go to the website and view what we talked about as far as beneficial ownership information and the private information that you will need to provide in that. There's a link to our YouTube channel. Go to our YouTube channel and subscribe. We're over 400 subscribers now. Get a notification when Maureen pops the next webinar in, which this is going to be this one, and it's going to be in just a couple of days. You can sign up for no-cost consulting with our seasoned and very well experienced and I think fantastic set of consultants. And you can go to our email address in order to, our website and get that started. Google reviews, if you want to leave a link or a review for there's the link that Maureen has provided. Compliments to Lisa by the immortal.
By Keith. Thanks, Keith. I appreciate it.
And also, there's the gone but not forgotten, you know. So going to retirement, what a wonderful thing. Yes. There's the contact information as I drool over retirement. So contact information for Lisa and where you want to get more information on this, the credit requirements, and next question, are there resources provided to help us find an office building if we're interested in 504 loan or even new construction?
you can definitely reach out to us here at SenCal. We have a great, set of resources of brokers that we can partner you up with, depending on the type of building that you're looking for. So again, we can help you with that.
Yeah, you got great contacts in the
We
commercial
do.
field, and that would probably be very valuable.
Yes, yeah, because each broker kind of specializes in if they're industrial, office building, if it's, office space, medical office space. So feel free to give us a call and we'll put you in contact with a couple people.
And our last question is going to be this one. Is it possible to combine your home and your business with the 504 program?
That's a good question. So it depends on where the home is and what the permitting is, if you're able to operate a business out of the home. It depends on the business itself. So I do have one particular business that is out of a residential area, but it is a kind of a residential care facility that doesn't need the permitting because they have under X amount of clients who are there. So we can use a home in that situation. So it's really a case-by-case basis. So feel free to give us a call here at SenCal and we can discuss that a little bit more in detail.
Well, that's an outstanding answer because I could have provided a little more information. The question is asked from a business owner in Inyo County, or maybe even within the Inyo County in the city of Bishop, to where there's a huge issue in Inyo County with land and finding land. And we see more and more of those, and it's in local ordinances, I think even are assisting businesses to locate more creatively because of the shortage of land. So excellent answer and excellent presentation. And the chimes of the First Presbyterian Church tells me that it is 1 o'clock and that's time to end the webinar. So thank you so much for joining us, Lisa Carbajal, the Vice President, SenCal Business Finance Group. It's hard for me not to say Small Business Finance Group, but I probably will still do that. So thanks for joining. Thanks everybody for joining. Everybody have a great week.
Thank you, guys.
We will be back next week, and next week we are going to be back with Kathleen Minigue, and she's going to talk about better crowdfunding. Crowdfund Better is her company. Not going to be available on our YouTube channel, one of the few that I mentioned. We can get alternative or other resources for business clients of the SBDC. Enjoy your SBDC day. I'm Kelly Bearden. We'll see you next week. Bye-bye, everybody.